Hey investors, welcome back to another episode of Vishal Wealth View. In today's episode, we have Varun Bevere sitting at a 52-week low. In today's episode, we are going to understand what is this company doing and does it make sense for us to build some positions in this company. Apart from that, we have Volatile Tips Music. This is a music label company. It has a high ROC and high ROE. That's why we're going to take a look at does it make sense for us to build some positions in this company. Apart from that, we have India Defence ETF, which is sitting at an all-time high. The war in West Asia is coming to a ceasefire, and to some extent ceasefire is holding. The war in India and Pakistan is also holding with a ceasefire. So I'm thinking about what's the chances of this entire index going up from this position by 20%, 25%. And I'm thinking about rotating this capital, so let's discuss that. And then we'll discuss the entire Nifty FMCG sector and what's happening with the stocks in FMCG. Why are they not giving a bull run? So without wasting much time, let's start this episode. First, let's talk about India Defence ETF. Now, I've been building position in this index since the beginning of April before Trump announced the tariff, and this was my way of protecting my portfolio against US-China trade war. I wanted to build position in domestic Indian industry, and this was one of the safe houses for me. Since then, the a lot of thing has happened. We had a terror attack in our country, and then there was a war with Pakistan, and the things in West Asia escalated. And this index has given a massive run up. Now I'm thinking, does it make sense for me to hold this position at this level, or should I book some profits? Now, if we see individual companies of this index, almost 60% of the entire investment is just these three companies: Bharat Electronics, HAL, Solar Industry, Mazagon Sh- Dock Shipbuilders. Bharat Electronics is a fundamentally strong company. It's trading at a PE of 56. It does not have any debt and it offers high ROC and high ROE. Along with that, the growth that we are expecting in this sector is around 16 to 17%, and the company has high free cash flow and the cash flow from operations that they're generating, which can be used to reinvest into other parts. Now, as things escalate, this company is bound to benefit. I completely agree. Along with that, as defense budget is announced, this company can see a minor push, and that's the only major factor I'm thinking that this entire sector can see a push of 10% or 20%. Apart from that, all the other companies, like example Mazagaon, uh, Dock Shipbuilders, then HAL, all of them are trading at a premium valuation above 30 to 40. And companies like HAL do not offer high sales growth as well. The profit growth that they are observing to large extent is happening because of operational efficiency and improvement in operational efficiency. But if they want to increase their revenue, they have to push their top line up. And I don't see how HL is going to do that if it's not going to deliver the Tejas aircraft and the demands that have been placed and the orders that have been placed by Indian Air Force. So it's a risky bet. Now, if we take a look at different fundamentals of this index, right now this index is trading at a PE of 61 with a price to book value of almost 15 and a dividend yield of 0.42. Now, this is a really less dividend yield. And if we see what's the price right now, we have easily crossed the 2024 historic price by almost 20%. So that's why I think it might make sense for me to book some profits over here now and rotate this capital at some other place. So let's sell some of this. I'm thinking about selling 1500 quantity at market, sell order placed. So this has been sold. Let's see if we receive the capital. Yeah, the capital is received. Our positions are decreased. Now let's talk about where do we want to move this capital. We have sold Motilal Oswal Nifty India Defence ETF. Now I'm thinking about building this position in Varun Beverage. I want to put some of this money in Varun Beverage and some of this money in tips. So let's analyze what's the story of Varun Beverage. So I was already doing some research around Varun Beverage. So from the looks of it, when I see the technical analysis for short term, the stock is currently in a bearish trend. Right now, it's trading at its 52-week low with the support level at 460 to 470 and the resistance at 500. So For a long term investor, this is a really good position. This is a really good time to build position in a company like this. The growth expectation of the company looks solid. It has a sectoral tailwinds, and the earnings growth are expected at 9.5% CAGR, which are not a huge earning growth, but again they are focused on increasing their top line. So I'm not thinking about this company from a short term point of view. I'm always invested in a company like Varun Beverage from a long term point of view. So from a long term point of view, the revenue is expected to cross 25,000 crore by 2026. It is right now sitting at 21,000 crore with a CAGR of almost 12%, and EPS is about to reach to 9.5 to 10. Let's compare it to the current results of Varun Beverage. Now, if we see the current results have a EPS of 7.67, and they are expecting that this EPS will reach up to 9 or 10 by 2026. That means in 2 years. So they are expecting 10 to 12% growth in their EPS expansion as well, not more than that. So growth wise, this company is facing challenge. I agree. So there is a risk that even though we are buying this company at a 51 PE, since the top line growth is not too high, it might not see PE expansion from here on. It was trading at a higher PE in the past because it was doing a capex, and it was going out buying subsidiaries across India, and that's why we saw major jump in their sales during this time. They were going out. They were going out. They were going after acquisition of subsidiaries. So if in future the growth is looking like 8 to 10% or 12%, it's a really tough sell for me to buy even at a price of 56. So, what's my final take on Varun Beverage? Varun Beverage is a great company. It has a good ROC, it has a stable business model, it has low debt. But on the basis of future, the growth they are projecting, I don't think they're selling at a right valuation. They're just too expensive for me to buy right now with no major capex and growth plan. If they had any product that was growing at a double digit or like more than 20% volume growth, then I would probably be interested in this. But right now, I'm not getting any signals like that. So, my take on this is that I'm not planning to sell my existing investment because I still feel it's a fundamentally strong company. I feel this company is going to face some challenges in coming 1 and 2 year. That's why I would like to wait and watch and not invest any fresh new capital in this company. Next we have is Tips Music. Now Tips Music is a music label company, and it was created after one company called Tips Industry was divided into two companies, Tips Films and Tips Music. Now Tips Music has a relatively simple business model. They buy and purchase music directly from music artists or producers, and then they have royalty for that particular music for 50 or 100 years, and they get revenue from streaming platforms like YouTube, Ghana, Prime Music, and other companies. Now, if we see the fundamentals of these companies, they are really strong. Trading at a P of 51, they have a ROC of 112% and 85% because they don't need to employ a lot of capital to manufacture something or produce something. It's mostly the art that's in the music that they're selling. Now, if we see how the stock has been performing since last 1 year, the stock is consolidating at its 50 DMA. And right now, if I see the sales growth and the profit growth, they are looking relatively healthy. But this is past. Let's talk about future. What's the future of tips music and tips industry is going to look like? So if we take a look at what's the growth prospects, what's the top line and bottom line growth we are expecting, then Tips already has a CAGR of 16.7% in last 5 year in terms of their revenue growth and top line growth. However, the profit was growing at almost 34% CAGR. And in the future, they're expecting their top line to grow at about 12 to 15% and their bottom line to grow at about 18 to 20% CAGR. Now, this is something I can deal with. 20% CAGR on profit with a 51p. Okay, I can understand. Along with that, the company will be having a large run up for its growth. Right now, it's just a $1 billion company. The market that it has for India can easily surpass $3 to $4 billion in next 5 to 10 years. So that's why I think I would be relatively more interested in investing in this company rather than Varun Beverage because it has a better uh, ROC, better ROE, and it can use its capital to generate returns in a better way. And it has a better dividend yield as well. So, in my opinion, Tips Music is a better company than Varun Beverage right now. Even though both of them are in a different space, I put them in a consumer space only. And one is growing at a CAGR of, one is growing their profit at a CAGR of 8 to 10%. Another one is growing their CAGR, another one is growing their profit at a CAGR of 18 to 20%. Both of them are relatively trading at the same PE. However, one has a relatively high ROC and less capital needs compared to other business. So in my opinion, Tips Music is a better business compared to Varun Beverage, and I'm thinking about building more positions in this. Okay, so let's buy Tips Music, 100 unit buy order. Security on the following list of cautions. Script is greater than 50. Yeah, I don't mind. I think I'm fine. Buy order placed. Buy order done. We have bought 100 units of Tips Music now, and we have 498 shares. So for the remaining amount, I have three places where I can park this: Prudential Mutual Fund, Small Cap, and Nifty Alpha 50. Now this is a large cap index. Both of these are small and mid cap index. So I have approximately 20 lakh invested in small and mid cap, and almost 15 lakh in large cap in this stock portfolio. I think I can increase position in this. As of now, I don't mind. There is no harm in doing that. So let's go out and buy. Okay, so we have placed order in ICICI Prudential Mutual Fund Nifty 200 Momentum 30. Also, I want to show you one new feature by uh, Grow. It's called Analyze feature, and it actually shows you the truth. That's my truth. That's my portfolio XIR 0.93 compared to Nifty Mid Cap 18.63. And it's actually true. Like in last 1 year, I made some mistakes in investment that did cost me money. And the main reason was me investing in momentum indexes. But I'm holding those investing investments as of now because I'm thinking about having an index-based strategy for a long term. So if we see the total uh, like distribution, majority of it is in small cap, which is around 23 lakh, and almost 5 lakh is in large cap stocks. Apart from that, majorly my money is present in ETFs because that's the strategy I'm following right now. I want to beat the market by investing in index, and I think it's a safe way to build your wealth over long term. And if we take a look at my mutual fund portfolio, and if we take a look at the positions and how they have been doing, the XIR over there has been relatively better compared to the XIRR at stock. Now, XIRR is internal rate of return. It tells you how, on the basis of the capital you're investing over time, the returns that you're generating. And that's all what I have for you for today's episode. I hope you enjoyed this video and are able to learn something from this video. Do hit the like button and subscribe to Vishal Well to you. Bye bye. Stay safe.